There continues to be evidence of a bigger picture battle going on in the FX market where there's more to it all than economic data. Despite another round of soft economic data and recent dovish comments from ECB Couere, the euro has held up well into dips and has managed to find support. We believe this bigger picture is associated with political forces at play in financial markets these days, forces that may not be as inviting to US dollar inflow. We've seen a clear strategy on behalf of the U.S. administration in which it has been wanting to effectuate a weaker U.S. dollar in order to rebalance the economy. This means making U.S. exports stronger and U.S. imports weaker. The way you do that is through a weaker currency. This, of course, is what all of the worry is about global trade wars. We also believe that there is more room for the Fed to move to the looser side of policy than other major central banks at this point, after the Fed had adopted what had been a more aggressive normalization scheme. This also means yield differentials that have room to work some more out of the US dollar's favor. Last week's horrid US retail sales print is one of those things that will get the Fed thinking more about that side of the equation. The other day, we highlighted an upward pressure building in the price of gold with plenty of demand for the hard asset, despite what has been, for the most part, still a US dollar bullish risk positive backdrop. And so these moves are more than interesting, as they could be warning of impending distress in markets that has yet to fully materialize. It will definitely be worth keeping an eye on the price of gold in the days ahead to see if the yellow metal can push through critical resistance in the form of the 2016 high up at $13.75. Today, gold traded up to its highest levels in many months. If the run continues and we see a break of that $13.75 2016 high, it would be technically significant, as it would open the door for a breakout after an extended period of consolidation. Earlier in the day, we had seen some yen weakness that was attributed to perceived dovish comments from BOJ Kuroda, though we believe the market was a little too sensitive to the comments that, in our view, seemed to be more about an academic exercise entertaining possibilities of what the BOJ could do and not what it would do. And this has been confirmed with that weakness fading and the yen trying to work its way back up. That's dollar yen back down as risk off works its way in. Over in the UK, the pound didn't get much from Brexit, but responded well to a batch of fairly solid employment data. Theresa May will be meeting with the EU's Juncker on Wednesday. That's all for now.